in the next 12 months-ish. So we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash.
In the ever-evolving landscape of cryptocurrency, understanding the dynamics of the Bitcoin cycle is paramount. Today, we delve into the insights shared by renowned investor Mark Yusko as he navigates through the intricacies of Bitcoin's halving events, market cycles, and the transformative potential of blockchain technology. Join us as we uncover the nuances of Yusko's analysis and its implications for the future of finance. Mark Yusko's perspective on the Bitcoin cycle is rooted in a fundamental understanding of supply dynamics and market behavior. Yusko highlights the significance of Bitcoin halving events, which occur approximately every 4 years and serve as catalysts for market movements. He elucidates how the reduction in block rewards incentivizes miners to adapt, ultimately leading to a scarcity-driven appreciation of Bitcoin's value.
The history tells us that the 12 months following the halving are the hyperbolic move cycle. And that makes sense, right? Just logically, what does the halving do? Well, it cuts the supply of block rewards that pay the miners for securing the network. So if the miners' costs are relatively fixed and their revenue goes down, in theory, a whole bunch of them would go away unless the price were to move. I think it's one of the most ingenious parts of the code, and there's a lot of ingenious parts to the code. But the fact is, in every previous halving, basically what happens is the fair value of the network doubles. Now, there is one nuance this time, and I don't know if you've been following it very closely, but there's the whole development of ordinals a year plus ago, and now as of the halving, there was this development of runes, basically meme coins, or the technology to do meme coins on Bitcoin. And everybody's talking about it, and some people hate it and some people love it. The reality is, what it does is it generates a lot of transaction fees.
Yep.
And transaction fees also reward the miners. So I think this time, instead of the fair value today, Tim Peterson would tell you is somewhere in the low 50s. I'll even round down to be conservative to 50. Normally in a halving that goes to 100. But let's say this time it only goes to 80 because the transaction fee offset. That's made up math, but it sounds right. And then in a normal cycle, we go to 2.3x fair value because of the FOMO and all the momentum and the leverage. But I think leverage is lower this time. So
100, 200.
Do we get to 150? Yeah, I think we double this time. So let's say 150, 160. And that would be by April, May of 25. Exactly. So by the end of this, now, I think it all depends. I've been saying that this can be the best Thanksgiving ever, right? No more, you're not welcome because you're a crypto person in the family. People are going to be like, oh, come on. It's going to be awesome. And people are going to celebrate the crypto people in the family this year. And so if that FOMO period is like the previous two, where from November to December, you go up orders of magnitude. I mean, remember, we went from 10,000 to 20,000 in 8 weeks. There are multiple factors in markets, and the biggest one really is supply and demand. Basic Econ 101, and we had a pretty significant demand shift, and it hasn't fully played out. In fact, it hasn't even come close to fully playing out. The math that always amazes me, I believe, in the next 12 months-ish, so we're a couple months, about 3 months into the ETF, and we've gotten about 10% of what I believe is coming into this space from the registered investment advisors that control all the boomers' cash. So the boomers have 30 odd trillion with these financial advisors. Not all of them will. UBS still hasn't said I can buy IBIT in my account, right? It's my money, my account. I can't buy it because they know it's good for me. Vanguard, same thing. So there's going to be 300 billion, I believe, that's 1% of 30 trillion, that comes in to this space. Scott, that's actually more money than has ever converted to Bitcoin in 15 years. Yeah. That's a pretty amazing thing, because what people forget is that multiplier effect of the bid ask, right? I convert some fiat into Bitcoin, but then I don't want to sell it. So someone's got to bid a higher price to get me to sell. And so you get that multiplier. Now, I don't think the multiplier is whatever Bank of America says, 118. Yeah, when we were talking pennies or dollars or $10 or $20, the multiplier was really, really big. Today, I'm going to say the multiplier's probably more like 20-ish. So 300 billion would add 6 trillion of market cap. Well, no, here's the crazy thing. In your 401k, not yours personally, but in people's 401k, they set the allocation on the day they start their job, and they choose 1 over X. So if there are 7 choices, they put 1/7 in each, and they never change, and they never rebalance, not ever. So people putting this in their 401k, not the 401k, in their retirement account, their IRA, it's over. And to your point, they're not going to stare at it. They're not going to look at it. And this idea that number go up, that's not the point. The point is the utility is going to continue to go up. The embracing of the technology is going to continue to go up. And at the end of the day, it is a finite asset. People say, well, Satoshi could show up and add more.
Yusko's analysis acknowledges the role of transaction fees in offsetting the impact of having events on miner revenue. By introducing the concept of meme coins and their potential to generate transaction fees, Yusko posits that the fair value of the Bitcoin network may not experience the traditional doubling observed in previous cycles. However, he remains optimistic about Bitcoin's growth trajectory, albeit with a nuanced approach to valuation. Drawing parallels to historical market cycles, Yusko outlines a conservative estimate of Bitcoin's fair value projection. He factors in the influence of FOMO, fear of missing out, and leverage on market momentum, while acknowledging a potential reduction in leverage compared to previous cycles. Yusko's forecast suggests a gradual but substantial appreciation of Bitcoin's value, culminating in a target range by April or May of 2025.
And the thing is, fine, could 51% of the participants change that? Sure. But the likelihood of that happening is really low. And the reason behind it, why it might happen, could be really interesting. So it's kind of like a stock split. But all of that aside, the demand for blockchain technology, of which Bitcoin is a blockchain. I love this whole debate, right? Bitcoin, not blockchain, blockchain, not Bitcoin.
Yeah, of course.
Like they're the same thing, right? We have the Bitcoin network, that is a blockchain network, and the Bitcoin token, which secures the network through block rewards. I don't know why we debate this. It just makes no sense to me. The reality is the dollar has not been the global reserve currency for the entirety of the world's existence. It just hasn't. In fact, it's only been the hegemonic currency for a very short period of time, about 80 years. And okay, yes, all of us who are living right now, that's our life cycle. But the reality is history is replete with examples of other countries, Portugal, Spain, Netherlands, UK, having the upper hand. And they use the same process. Look, I think it's interesting. So if you lend money to people, individuals, it's a good business, right? The Medicis kind of invented it. They stole it from the Portuguese monks. And the nice thing is you can influence people to pay you back if they don't pay back, right? But it's not really that profitable relative to if the person defaults, what do you get? You kind of get their stuff, and that stuff's not that valuable. So then you can lend to corporations. And if the corporation defaults, you can get the company. And some companies are actually worth a lot of money. Well, the Rothschild clan figured out, if we lend to governments, now we're talking. Because when the governments default, we get power. And power creates massive wealth. And so lending to governments has been how you control things for centuries. And, the fact is, if I want to send money to, I say, my mythical, mother-in-law in El Salvador, who happens to be here in Chapel Hill, she just came from Tulsa to visit, but if she were in El Salvador and I wanted to send her money, I would send $1, and Western Union and the Bank of International Settlements and a whole bunch of other people would take their cut, and she'd get 70 pesos. Think about that, a 30% slippage. If I used the Strike app and sent her across the Bitcoin blockchain, she'd get 100 pesos. That's better than 70.
Faster.
And faster.
Beyond market dynamics, Yusko underscores the transformative potential of Bitcoin within traditional finance. He highlights the emergence of registered investment advisors and institutional investors as key drivers of Bitcoin's adoption. Yusko's analysis reveals the untapped potential within retirement accounts and IRA funds, which could fuel significant inflows into the cryptocurrency space. Yusko's insights extend beyond financial markets, delving into the historical significance of currency hegemony and the role of blockchain technology. He challenges the notion of Bitcoin versus blockchain, emphasizing their symbiotic relationship in shaping the future of global finance. Through historical examples, Yusko contextualizes the evolution of monetary systems, illustrating the potential for Bitcoin to disrupt existing paradigms. Please like and subscribe my channel.